You wouldn't believe me if I told you that this is the Euro chart. So what this ultimately means is if you've been holding Euro only from 2008, bearing in mind, sorry to even cut myself off there, this is the Rwanda chart, meaning that it only shows data from 2002. If we're able to see data going back all the way to the 80s, you see a lot more price action, right? And that's something that I will change. It's just that Rwanda is the exchange that I use in order to execute my live trades. Hence the reason why I use the Rwanda charts to trade Euro. But if you have a look at the highs of 2008, 2008 to the current price now, the highs was all the way at 160. Now we're at 108. Massive sell-off. Shifted market structure. Consolidated rally. Sold off. Took stops. This is 2010. Right. Come back up. 2011. Failed to trade up to the highs. Come back down. You have an intraday. 8584. 7, so yeah, the lows was created. Traded into the lows. This would have been the next point of interest. Running back up, didn't really go anywhere. We did get back to this order block here. This order block here. Traded up into this area here. Capitulation. Shifting market structure. Still never happened yet, but it happened in this candle here. So that means that this area will be prone for price action to rebound into. This is on the 6 months, by the way. We got that there in 2017. So from 2014 going into 2015, we completely sold off. And it's funny because that is what a lot of people was expecting when the 2008 crisis happened, but we actually got that much later. 2014 going into 2015, absolutely sold off, and that was during Brexit as well. So that was all part of the plan. Sold off, and ever since we had a macro shift in market structure, we actually haven't reached back to that level. Especially from this massive bearish candle, we haven't really reached back to that level there. We gave the low in 2017, rebounded once rates started to come up, failed to do that, spiked, dropped 1, 2, 3, 4, fucking hell, 4 consecutive 6 months candle. That's 2 years straight bearish. Trade, this is an order block, we trade into this order block right there, we do another lift off going into 2020 didn't even give us enough juice to go and attack the highs. We didn't. 2021, 2022, 2023, and this is 2024. So 21, 22, 22 is the time we created the low. 23 going into 24 now. Bear in mind, 23 was actually a bullish time for Euro. But does that mean it's going to be the same for 2024? Spiked already created the lows. We haven't took lows out there. We can take out lows there. If you were to rally to the upside, where would be our next point of interest? Well, it would be 115 to 117. And our next point of interest would be 1, 2, 3. But that is a bit too far. I believe we have to take it one step at a time. So my next point of interest would be 1.12, 757. Then 1.14950, and we'll leave it as that. This is a 6 months time frame, by the way. If you have a look at the 3 months time frame, we have an order block, respected, down close candle into the last down close candle in this massive sell-off, taking sell side liquidity out. We confirmed with a bullish engulfing candle, closing above the open, but failing to get above the highs Next candle comes in, which is an inside 3-month candle. This current 3-month candle has taken sell side out, but has failed to. We've got another 27 days left, but we are yet to run into buy stops. Since we've already taken sell stops out, there's a good chance that we could rally to the upside. There's a good chance that could play out. If we do that, then immediate targets we've got. Would I call this relative equal highs? I can't call these relative equal highs. I was taking a piss. We've got short-term highs there, short-term highs there, short-term highs there. So 1, 2, 3. We'll be looking for a massive pull up to this region here. And that's on a 3-month time frame. Now, if you move over to the monthlies, then turn on my analysis. Now we can see what's really going on. So from the sell-off that occurred at that time, we sold off order block. Have not reached into that area yet. Immediate swing low, immediate swing high. We have not traded into that 50% equilibrium. Dealing range, high, low, equilibrium. Bearing in mind that when we had a look at cable, price was already in a premium. Bear that in mind. We spiked into 1.23, I believe it's 1.23, 1.26, 1.23035. 1.23035 is considered to be equilibrium. So any price lower than that would be considered as a discount, which we got briefly on the day of Monday, the 22nd of April. Now, when it comes down, because bearing in mind, we're having a look at this from a weekly standpoint. All right. On a monthly time frame, we're on a discount. On a monthly time frame, we're in a premium. So GDP USD is in a premium. Euro is in a discount. GDP USD is more inclined to continue to trade to the upside, attacking consequent encroachment and the upper fair value gap, whilst Euro, even though being in a discount, is more inclined to attack equilibrium, which is located at 1.09472. Let's zoom into this area here, because this immediate low and high equilibrium is what a lot of people are looking out for, because this is an easy 50% retracement, but it never came to fruition. This October candle is the lowest that we've ever got. After that, prior to current price action, we had 4 bearish consecutive candles, which traded into this micro imbalance here. It's not really that important. And in all honesty, everything here is just choppy. It's just sloshing around. It's not really anything to take serious. I mean, for those who are intraday trading, oh yeah, you can have fun in those ranges, of course. This month, we barely scraped buy stops. We didn't take sell stops. We did close higher than the open of the previous month. And I do believe that 1.09472 is next in cards. It's next in the cards. That would go against everybody who is following the trend, the overall trend, which is bearish. We're currently obviously range bound at the moment, but that does not mean that sell stops and buy stops in forms of pools of liquidity above highs and lows can't be taken. First point of interest would be 1.09472 with 1.09813 being the next point of interest. My third point of interest would be 1.11396. But I'm gonna leave it as that for the time being for this month, just for the mere fact that I would call out this bearish order block one more time, which is a possibility. But then I do believe that that could potentially play out next month. 1.13 to 1.12, I'll just round up the numbers there, is another point of interest if we do get a gigantic move to the upside. So we closed 90% within the prior week monthly candle. If we move over to the weekly, candle, we can clearly see that 1.04059 has not been met. Let's zoom into what is actually going on here. So this is on a weekly time frame. Highs, lows, stops on a weekly taken. Once that occurs, we consolidate for some time. October, we rally up. November, coming up towards the middle and the ending of November, continue to rally. We take stops. We trace into the fair value gap, which also records a order block as well. So this is a bearish order block, a bullish order block, which price spikes into. So we close in the fair value gap, but we spike into the order block before rallying higher. Before we rally higher, we want to place our stop below with targets above this prior high. Because remember, all of this never occurred yet. Target a couple ticks above this high, or we could use this imbalance here to take profit, which would have worked in your favor if that was something that actually panned out. We also got an order block here, which was respected there. We did get a small retracement, because bear in mind, remember, once we get this sell-off, with the intention of buying and going long. But then if we place our stop all the way down there, that's not going to work. So we have to go into maybe the daily, not even the daily, what am I talking about, the hourly, the 15-minute time frame, to see if there's any fair value gaps within this area right here. Map it out. See if there's any fair value gaps within this area. So you place your long right there, stop below, and obviously your target, bear in mind this has already happened, your target would be here. That never occurred, sold off. But before that happened, we even get to low of this candle here. That would be considered a bearish order block there. We sell off, taking out these lows there, run back up into an order block, equilibrium. All right, and this is on a macro time scale. All right, we're currently in a discount at the moment. GDP USD is in a premium, and if GDP USD continues in a premium, euro, there's a good chance for euro to catch up. Also considering the fact that sell stops has been taken, sell stops has been swept on a weekly time frame. So on a weekly time frame, we still got relative equal highs, because people still can place their stops up there, highs and highs. With that point there being of interest. Now if we move over to the daily time frame now, all we're doing is having a look at this right here. I'll be honest, what I might do, I might actually delete this order block here because it is very messy. What I might do is extend this out in time. There we go. So we've got buy stops there. Order block there. Hats up, close candle within the bunch before the sell off. I will be doing this later on, so I'm just doing this because I just feel like I have to, I'll be honest. So what we've got here on the daily time frame is once you trickle to the upside, traded into BSC, continued to rally, created a fair value gap, which price did come back and respect. Confirmed. These are the highs to look out for. Taken, imbalance in price, but before then we've got order block. I have not reached into that order block. Imbalance, trade, sweep stops, buy stops, retrace, we didn't close below the May 15th low on the daily time frame. Come back up and test that region again. But candle body tells us a different story. Roll over, shifting market structure. And then this Friday here, we took buy stops, but we didn't really do that much damage. So the real range is at 108551 and 107818. Now, if we're looking for longs, I'd like to see manipulation first to the downside. So ideally, I'd want to see, because we're yet to see 1.08851 broken, I'd like to see stops at the daily bullish order block taken first. So I'd like to see price trade into that area there before running up. I'd like to see that. So new lows before highs is created. 17 minutes in, I want to go into the hourly time frame briefly. And as you can clearly see, we've been on a downtrend, high low, took highs out, imbalance where price has settled. It's funny because if I was to go back in time, I don't know if I'm able to see, I don't know if you guys are able to see this, but I actually made a prediction about price actually trading into this very area, which is 1.08450 or 1.08471. 1.08471 is right there. Don't know if I'm able to get to the actual tick right there. And it's funny because we closed there immaculately. That was where I believe price action was going to reach into, and I mean that's where we stopped. So it's pretty good. Have a look at my trading view account to see where, especially when it comes down to intraday price actions, to see what I'm looking at and where price is most likely to go. Because I'm not gonna lie, I'm getting better at this, guys. Getting better at this. I only started learning this a year and a half ago. You know, I'm putting my all into this to really figure out how this works. You know, so far so good. So, you know, I appreciate the love and the hate. I want to see both sides of it, and you know, keep it going. Yeah, with that being said, I'm gonna wrap up. Move over to good old gold. Oh yeah.